Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your end of day market recap for Monday, December 13th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please go ahead and read this whole risk disclaimer here. And if the video is a little bit blurry, just give it a little bit more time for YouTube to render the high definition version of the video. So, theme of the day, a pretty easy one. Didn't take too much analysis to figure out this for the day, but complete risk off. Something that I tweeted out earlier in the day, I think like after about 20 minutes in the day, just looked at like 3 or 4 things, such as the VIX, was up and basically stayed up for the whole day. Closed above 20, was up about 9% for the day. The TLT, right? So bonds, they were indicating risk off as well. The TLT finished up 1.5%. That chart continues to be very, very choppy. I'm not going to bring up the bonds chart. I'll move on from that. But if you take a look at the daily chart of TLT, it's just very choppy looking to me, back and forth around that 200-day moving average. And then also, when you looked at a couple other things, what did I mention? Breadth, bonds. Oh, yeah, breadth, right? So that was the other one, too. As soon as we kind of opened, the breadth did not look good and just kind of remained that way for the whole day, right? So if we look at the raw numbers, you could also see the indicator that I have on the bottom left of the screen, right, which is our breadth along with volume associated with names that move up versus names that move down. But there's the raw numbers if you wanted to see. You've got 23 decliners versus 7 advancing names. S&P 322 decliners versus 182, and Nasdaq over 2,000 declining versus 812 advancing. You could really see this 4-week new lows really pick up here. 4-week new lows, 15 for the Nasdaq, 3 S&P, and it's kind of odd. I'm not sure if that number's right, considering it's more than 30, but it says 20. That can't be right for the Dow Jones. So I'm going to question that information from Bloomberg. So let's talk a little bit about some of the sectors that we saw. Again, also indicates more of a risk-off tape. Consumer staples, right? We talked about them towards the end of last week. Very strong. They continue to move higher, up 1.3%. Utilities also very, very strong, up 1.2%. REITs, even though they finished flat. I think my spreadsheet's actually wrong because the Russell went ex-dividend today. So things like IYR as well as IWM also went ex-dividend today. All right. What else? So those were the outperformers, and I'm going to show you a couple other charts in that. Regarding just the theme of what we've been seeing recently, but also if you look at the names that underperformed, again, a lot more things in the red. Last week, which was one of the best performing areas of the market, which was oil services, gave back over 4%. The semis, which have been super strong, were not super strong today. They were actually pretty darn weak, down 2.6%. Blockchain stocks, they are weak with the cryptos. Retail stocks down 3%, and also oil and gas names down 4.5%. And then when you look at growth, right, the IBD 50 down 3.4%. The ARC ETFs also down for the day, but I think a little bit off the lows. But again, big underperformance there for this year. So a couple of charts that I was going to go through with you guys is number one, just the S&P chart. We rallied a little bit in the overnight market. Once again, we're seeing more gains in the overnight market than in the intraday. That's very common, but just seems to be even more evident recently, is that a lot of gains are coming in the overnight market, and then not so much during the cash market, 9:30 to 4 o'clock. Notice the level that we tried to kind of get over, 47.13. We've talked about that level a few times. We just can't do it right now. Right, and the 1-hour chart too in S&P is also rather telling. Right, we broke back inside value and not so good. Nasdaq is a little bit similar to this, even though we did not start the week above value. We could not get above value for the week, and also, very similar. We hit the top of value twice, actually maybe three times this month, and just have not been able to get higher. So to me, that's a little bit problematic in the short term, but I would say, and that's one of the main themes, or I should say main messages of this video, is just to kind of hang in there. This is a very difficult week to trade. We've got Powell, and there's a lot of moves that are happening, prior to Powell's speech. Just by looking at what's going on with the utilities and the consumer staples, funds are moving into really some risk-off areas of the market. It appears that they want to stay in the market right now, but they do not want to own anything that has a risk premium to it, or high beta, higher valuation. It does not appear that traders really want to stick in too many of those names. I don't want to say all of the, 100% of those names. There's a couple relative strength names out there, but it's very difficult. And so a lot of these moves will happen. Like if you're waiting for the Fed to kind of state what they're going to state, sometimes you could see that the damage is already being done. So right, so you might actually get a sell the news or buy the news type event when Powell speaks, even if he's hawkish at this point, right? It could be that the damage may be being inflicted by funds already moving out of a lot of riskier areas in the market. When I say riskier, I just mean higher beta areas of the market, more growth stocks, especially small cap growth. So, and if you take a look, right? So this is, we'll go back to the S&P chart, but one area that I kind of picked up on this weekend was dividend appreciation. So if you look at a couple like dividend ETFs, right, where that seems to be what the theme is right now of strength, right? So notice how this was only down 27 basis points. And if you go through these names, right, so VIG, we'll bring this up in Bloomberg, but it's mostly the sectors that I just talked about that are outperforming. But you could kind of see, like a Microsoft, United Healthcare. You go through these charts, a J&J, which was strong today, a Procter and Gamble, right, an Abbott Labs, that's a Pepsi, a Coca-Cola, right? So that is where these types of and of course someone sent to me, oh well, there's not that much of a dividend in this stock. It's just the theme of owning something that has a little bit more of like a cash portion to it, but you also kind of have to be careful with this because as we're seeing, breadth get weaker and weaker in this market, eventually what will happen if this market really wants to take a spill, hiding out in the utilities and the consumer staples, maybe they go, if the whole market gets hit, the staples and utilities will probably hold up a little bit better, but they'll go down too. So I've seen this before, and it doesn't happen every single time, but sometimes the utilities and the consumer staples and the REITs are like the last leg of the market. So I would be wary of that, and I think the conclusion here is we want to see more participation. If the market just continues to get weaker and weaker under the hood, it's going to bring down the whole market. That's I think what it will happen next if market breadth does not improve, right? So so what does that mean? It means that we have to see some buying by the institutions, right? Selling can also feed into selling too. So it looks more and more like last week, the bounce that we saw in some of the higher beta areas of the market looked to be a bit more short covering than it did real investment. Regardless, that doesn't mean you have to give back any profits if you made money last week on some of those moves, but you just have to realize that there wasn't big commitment. And if you go through some of these software names and some of the higher beta areas of the market, they don't look particularly good, right? And a lot of them, right, they just rallied up to a certain level. Right, like the 20-day moving average. This is IWO, but if you want to look at ARC, for example, right? I don't mean to pick on ARC. That's not the goal of this video, but you know, this is, for example, taking out a virgin point of control, bouncing, right? But not too much of a bounce, like not retracing anything technically that gets you excited, such as a 20-day moving average, right? I had gotten a lot of questions about like names like PayPal, right? PayPal and Square, right? They bounced, right? Bouncing in a downtrend, but continuing to resume and go lower. And I think you have to be careful of names taking out the lows from last week. Okay, a couple of charts that I was going to show. Several traders brought to my attention. Oh, let me go through what I traded too. Yeah, and this was not a particular great day for me. I had tried, and I had mentioned on Twitter. I chuckle because this is just sometimes how Twitter works. But I tried Snowflake. Snowflake, also hit resistance. It has been a name that's been holding up better. It's still above the 50-day moving average. I also tried what was the other name? Intuit. Would look like a decent setup, and it still may work, but I just didn't like the weakness. It wasn't down that much, 1.3%, but I went into this. I had an alert set on this right at the top of value. And we're seeing this in a lot of places, right where stocks need to turn and make that turn and push higher. They're turning back and going lower. So I got fooled a bit on this one, and took off half in the middle of the day, and then just took off the rest at the end of the day. Trying to give it a little bit of time for the day. And maybe that's just not enough time, but I'm happy to kind of, in a lot of these names, I would rather hold the cash than the position. This market is just too dicey. I don't think it's a great market to like continue to accumulate positions into weakness. So I would rather just take it off and start over. Let me show you a couple of charts that I thought were kind of interesting. Unity Software kept coming back all day today from the lows, put in a nice hammer bar. The only thing I don't like here is that you still have to get over a short-term moving average, right? I talked about this a couple weeks ago. I like to see price get over like the 5-period moving average, and the slope to get higher. It kind of tells you that there's buyers coming back in. And we don't have that yet. Now, this did get into value, and I believe Morgan Stanley upped their price target in this. So it'll be one to watch. But again, this market has been more about watching than trading right now. Another one that I think is a strong name in the software space, ServiceNow. I was watching this one. I did not trade this one. I want to see this get back above the 50-day moving average, right? So, and it won't take much more to do that. You could actually draw a trend line in here, but I view ServiceNow as a quality name in the space. It's not letting me draw this where I want to, so I'll move on from that. Ford had a big day on Friday. Big retracement, down 4%. Give a decent give back of that move on Friday, but it's just an inside day, right? So I would watch 2022. I also mentioned another level on Twitter, which is 2053. I think that's also a good level to watch. I would want to see a move back above here, back above 2053 for confirmation. But so far, it held where it needed to for quite a big inside day. Also, Abbott is a name that I capitalized on over the last week. Right, nice move here out of consolidation. I just think with all this COVID, increasing in the variants and such, that testing isn't going to go away. Two companies that do a lot of testing as well as other things is Abbott and Thermo Fisher. So I traded Abbott. I've not traded Thermo Fisher. We got a level to watch there as well, 647.50 or 647.56. That's what I would watch for tomorrow and a possible break higher. But it's been tough. The areas that have been breaking out are the those low volatility areas of the market. We were joking around about this name earlier. This is a name that I had on the watch list, not this week, but last weekend. And this Con Ed has done very well, right? And I think is moving up to 86. So that's another name. What else did I have in terms of my trades? XLV, a little bit late to this one, but I like the strength that I'm seeing in this group. In particular, like just a couple names that caught my attention was J&J. Nice move and a nice move back above the 200-day moving average. This is not, even though it's had a big day for J&J, up 1.8%, the stock is still not extended. A couple other ones too. Amgen has been an underperformer. I've got nothing on an Amgen, but I'm watching for a break over like 212.50. Again, in a downtrend, but maybe you could see a decent move, maybe 215, 220-ish. And there is a VPOC all the way up here, but I don't know. I mean, that's a fairly decent move to get you all the way up to that 200-day moving average. All right, guys, that's it. I'll keep the video short. And in this market where you've got the horrible breadth and only the low or mostly the low volatility areas of the market, more of the boring areas of the market. Those are the ones that are holding this market up pretty nicely, or pretty decently, I should say. Preserve your confidence in here. And there's a question earlier when we had our when I sent out the midday video. I had somebody ask me, "Hey, what do you think about like taking a day off this week with the Fed and quadruple witching?" I said, "Hey, there's nothing wrong with that. If you want to, go ahead, play golf." And just wait for a bit of a better environment. You could also do that, like if we by chance, manage to see some more short covering or a relief bounce going into the Fed. Take that money, put it in your pocket, and then go play golf, right? So that's another way too, is to kind of try not to get washed out in this market, and see if I think just getting through this week, a very event-filled week. We also have the PPI report, right? Everybody, all the attention was on the CPI report last week. PPI report is important as well. That's out for tomorrow. So you just have a loaded week of events, and I think that we're already seeing some funds say, I would rather wait until I get confirmation from Powell about how aggressive he is regarding tapering and raising rates for next year. All right, guys, that's it. Have a great night. See you tomorrow.